South Africa is easing lockdown restrictions and opening up for business, but businesses are now being threatened from within. In Ghana, this threat is called Dumso, but everyone knows it as electricity blackout. Eskom load shedding is costing jobs in South Africa. PwC South Africa reports that 350,000 jobs have been lost, while chief economist at economists.co.za, Mike Schussler, revealed that South Africa has lost well over 1 million jobs. Despite disparity in the figures here, it is agreed that businesses and livelihood have been impacted negatively. Investments in Africa's most industrialized economy have reduced due to COVID-19, and the planned investment summit next year may not hit its mark if these bouts of power outage linger into the new year and beyond. Several intervention schemes have been tried, and Eskom has changed leadership more than any other state-owned entity. So now we begin to ask the question, how will South Africa get the utility company out of this? And why has the blackout and power cuts in Africa's most industrialized economy lingered this long? We'll get into all of this and many more today. I am Lekon Obanjo, filling in for Tolulokpe Adelere Balogun. Welcome. This is Business Edge. Joining me now is Christy Viljoen, an economist at PwC South Africa, even as we take a look at South Africa's load shedding and job losses. Glad to have you join us, Christy.
Good day. Thank you for the opportunity.
Let's start this way. Now, stage 4 load shedding has been declared in South Africa barely a day after stage 2 was announced on Sunday. Are these compared to force majeure? Would you say that has there been any legal action, so to speak, against the utility firm for losses incurred due to blackouts? Or do you think that Eskom should be held responsible for this laxity?
I think you can quite easily compare it to force majeure. Basically, it's a service that's being delivered that suddenly stops. If you think of commodities or different kinds of products that get supplied maybe from one business to the next, force majeure basically means that the supplier says, we can't deliver, we're going to stop now. And it's based on legal contract, and they can't really be held responsible when you declare this clause. In the case of Eskom, it seems to be a tricky legal situation. I'm certainly not a legal expert, but as far as I understand it, unless you have a direct contract with Eskom that guarantees you power supply, there's not much you can do. Eskom would also argue that they are making power cuts in order to save the rest of the power system. So it is being done in good faith in that perspective, trying to save the rest of the country. We do know that there are one or two avenues where people can claim direct damages. So if, for example, you suffer load shedding and your fridge or your freezer or any of your local home appliances get damaged, there are one or two options. The alternative is obviously your insurance company. We haven't seen big legal cases in this event, and I think there might be a few legal situations that could still arise. But in general, it does appear that Eskom has the ability to implement these load shedding schedules without many legal recourse options available to South African business or consumers.
Now, Christy, can there a legal case be risen when it comes to sabotage? Because some people are speculating that there could be a case of sabotage at Eskom. Is there any possibility that this could be? Owing to the fact that, of course, you know that elections, that's local government elections, were recently held. Do you think there could be some sort of sabotage on the part of Eskom?
Well, I guess if you look at sabotage broadly, we can probably say yes. We know that from a technical perspective, Eskom and some of the labor unions are saying that their staff are not physically sabotaging. So by that sabotage, I probably mean opening or closing a valve that should not be moved, damaging equipment on purpose, for example. So I think that's going to be the official argument. If you think of this more broadly, I think you can say yes, there's certainly some form of criminal element. We recently, this week even, we heard about one of the power stations where fuel oil is being stolen on a monthly basis to the value of hundreds of millions of rands. We see negligence. We see go slow where there is labor dissatisfaction. So there's a long list of activities that are happening that you can either name as criminal, or you can name it as negligent, or any of those kinds of descriptions that I think most South Africans would probably like to name as sabotage. It's activities by people within Eskom and the public sector that are translating into load shedding. And we get to the point where there's talk about economic sabotage, basically where people are acting improperly, where their acts are resulting in load shedding, and by that way the economy is losing its momentum, we are losing jobs, businesses are closing down. So I'd agree, if you look at sabotage quite broadly, yes, you could certainly say that economic sabotage is one of the issues that are being talked about a lot when it comes to analysts at this stage.
All right, Christy, let's look at the body language of government. How would you describe their response so far in cushioning and mitigating the impact of the power outages experienced in South Africa?
Well, government is obviously acutely aware of these problems, and they are working on this through the Department of Public Works. We know that the President Cyril Ramaphosa, said this week it's giving him sleepless nights. We know government is involved in trying to resolve Eskom's funding situation. It is as the government guarantor of a big part of Eskom's debt. So from a financial perspective, there's a lot of problems. We also know that the president announced in early 2019 the intention to unbundle Eskom. So government is driving a plan where Eskom would basically be broken up into three entities: generation, transmission, and distribution. At the moment, Eskom controls that entire value chain. The intention from government side is to break it up in order to get the efficiencies that are available, and there where there are problems, get those addressed as well. So government is certainly directly involved, but to be very honest, progress is slow. It's too slow, given that we are still facing load shedding any day now. At the moment, we have load shedding planned for the rest of the week, and I think the problem is just that the challenges at Eskom in terms of fixing many years of mismanagement, many years of financial mismanagement, to fix those will take a lot of time. When you listen to even the leadership of Eskom, they would tell you that the old networks that existed, the human elements that resulted in much of these mismanagement, these problems that are existing, those are still there. There are still people working at Eskom that are not doing their job properly. And I think at this stage, government is doing a lot. One could easily say they need to do more, but it's certainly not yet having the positive effect that we need.
Well, we understand that this sort of incompetence that we are seeing in Eskom is affecting so many businesses, so many startups, the manufacturing industry, the mining industry, even the telecommunications industry. How do you think they are reeling in all this? How do you think they are trying to cope to stay afloat despite all these challenges that we see in terms of power outages?
Well, we are certainly seeing a move towards self-generation of electricity. We know that many of the big businesses, big corporate buildings, big factories, they have installed solar power. There is a growing need for smaller power generation units, and government has actually recently announced that companies will be allowed to establish power generation up to 100 megawatts. So that's something that would be very attractive to a factory and to a mining installation that uses a lot of power. So there are avenues. There are certainly options for big entities to sort of get off the electricity grid, or at least reduce their dependence on it. We already know that we have in South Africa 40,000 what's called prosumers. So it's not just a consumer of electricity, but production also. So it might be a big factory with solar powers. They both produce electricity for themselves and they feed it back into the system. The big issue around all of these opportunities remains the cost. It's the cost of installing, it's the cost of investing. Now, these costs can be recouped over time, but given South Africa's challenges with rising business costs, rising operational costs, it is an additional challenge for these companies to invest money into something that in many other countries in the world, you would simply just put on the switch and there's reliable electricity. It makes our economy less competitive. It makes for increased business operating costs. And in the end, those elements translate into less investment, less job creation, less economic growth. So it's still, even though we've got opportunities for getting off the electricity grid, it's costly and it's not promoting really economic growth where we need it.
All right, Christy, you get to stay with us for a while. We get to engage you on. But then Christy has said it. It's all about finding alternatives when it comes to looking for power sources. But then unexpected power station breakdowns, delays in facility maintenance. You talk about depleted emergency systems have said to have resulted in nearly 15,000 megawatts of capacity being out of action in South Africa, thus resulting in power cuts, shutting down of businesses and job losses, as we have said. Now, the current load shedding is projected to reduce the country's 2021 GDP growth by 3 percentage points, while the mining, manufacturing and telecommunications industries are struggling to breathe. Now, the question is there a way out? Can there be a way out of this quagmire? Well, we get to find out more as we engage our guest. It's still Business Edge. Do stay with us. We'll be right back. Still with me is Christy Villajon. You're still watching Business Edge. We have been taking a look at the issue of load shedding and how job losses is been experienced in South Africa. Now, Christy, let's come back to you. Let's take a look at NUMSA. That's one of the largest unions of South African engineers and metal workers who, according to reports, they have just secured wage increase. Now, could this blackout and possible production loss affect the implementation of the wages?
Well, I mean, yes, we have to think that production losses will have to occur in the next few months. When we get questions about with load shedding next year, it's completely unpredictable. You just have to assume that it's going to happen again. So you have to think of the industrial sector, manufacturing, steel, for example, where these people work, and you have to think that those companies are going to continue to be under pressure in terms of their productive ability. And then that would then pressure the ability to pay wages. The situation in South Africa, however, is such that labor unions are quite powerful, both because of legislation, but also because the labor movement has a very close historical relationship with the African National Congress, the current ruling party. So labor unions have been able for many, many years to secure significant wage increases for their members, which is their responsibility, obviously. But it's very difficult for employers to, at a later stage, then push back and say, we can't afford this. So I can't really see an opportunity for employers to say in 2022, because of load shedding, because of power cuts and a production decline, we cannot afford to pay these increases. These increases have been signed on paper. It has been contracted. So irrespective of really what happens on the production side and the load shedding side, these wages will have to be paid. It is something that is not really within the control of the employer from this moment going forward. The payments will have to be made. So that just puts additional pressure on manufacturers, for example, and the uncertainty of what their financial flows will look like in 2022.
Invariably, what we are seeing now is the possibility of salaries being disturbed and affected. Well, employers also would have big issues in their hands when it comes to paying their wages. Of course, we have issues of unemployment, and those who are trying to get into the labor market will definitely find it hard doing that now that the economy is fragile. But then, according to reports, South Africa's unemployment rate stands at 34.4% in the second quarter, and recent development indicates that in the third quarter, it will be far worse. Now, do you agree with this, judging by the current situation, partly those that you've also mentioned?
I agree that the third quarter data could be very disappointing. We didn't have much load shedding in the third quarter, to be honest. We had about 11 weeks of no load shedding, and it started in October. But our big challenge in the third quarter was a period of unrest in the country. It was in early July. It followed the arrest of former President Jacob Zuma, where this event sparked lots of protest. And then from there on, about a week or 10 days thereafter, we had a situation where in the KwaZulu-Natal province and parts of Gauteng province, we had unrest and looting and damage to infrastructure, both public and private. It's generally agreed amongst economists that the reason why this unrest continues so long is simply because you've got so many people that are unemployed, sitting at home in poverty and seeing all kinds of inequality in the country. It is something that has happened over history and over time across the world, where these people have acted on their frustrations. What happened was that for a week, even 2 weeks, we had significant disruption in transport between Gauteng and KwaZulu-Natal, which is one of the biggest transport routes in the country. We saw businesses closing down as a precaution, but also due to damage. We see some of those shops will only open next year, even the year thereafter, due to damage. So what's happening in the third quarter, when we eventually get those labor and those economic data, we'll see that a big number of jobs will probably be lost. We lost many jobs last year due to lockdown. We're probably going to lose many jobs in the third quarter as well. That's going to further escalate the unemployment rate. And at this stage, South Africa officially has the highest unemployment rate in the world. It is just going to make that situation even worse for us. So even before we had got into the fourth quarter and load shedding, that's what happened in the third quarter. So the labor data will certainly not be pretty for then.
Well, Christy, it's quite interesting that despite all these stats and what it is telling us, now growth projection of South Africa is critically threatened by this. And well, when you look at the earlier forecast, it's been said that there's a possibility that they might not be able to meet up. You've also mentioned this. But then, for instance, Christy, GDP in South Africa is expected to reach $320.00 billion by the end of 2021. And that's according to Trading Economics Global Macro Models and Analysts' expectations. In the long term, the South Africa GDP is projected to trend around $345.00 billion. That's next year. Is there any ray of hope? Is there anything South Africans can hang on? If you were to advise Ramaphosa's administration, what would you tell him in order to raise the hope of South Africans that, okay, today might be that bad, the way as we see it, but next year could be better if we put things right in proper perspective?
Well, I must agree that reaching those GDP goals, it's going to be very challenging. I think those goals are probably based on expectations that our economy will grow by 4.5%, 5%, even more than that percent this year. Our central bank recently said 5.3%. Our own estimate is closer to 4%, and that includes us taking into account load shedding returning in this fourth quarter. So our modeling actually focuses specifically on the impact of load shedding on GDP. So based on what we're expecting, economic growth of only 4% this year, I don't think it's going to happen that we're going to see a South African economy in 2022 that is as big as we would hope. It's not a surprise, to be very honest, that South Africa's economic forecasts are generally too optimistic. Every time you look backwards, you said what the forecasts were and the actual numbers were, it basically comes down to we were too optimistic. One of the key reasons, I think, is that as many humans, you want to be optimistic next year will be better. So we're thinking we're going to implement that policy. We're going to bring in that change. We're going to open those doors. We're going to get those investments. We're going to go to that summit. So we are optimistic about 2022 because there are things that we want to happen. But in the case of South Africa, where policies are often very slow to be developed, legal structures are very slow to be implemented, we're always a little bit of a step behind. There's always this uncertainty about when things are going to happen, how it's going to happen. So I would say whatever the current expectations are of the economy in 2022, it is reasonable to say that people will be disappointed. We've seen that in the past 10, 15 years frequently, that we are disappointed when we look backwards. And it is a case of businesses need certainty. They need to know what the country will look like 2, 3, 5 years from now. So you need to know on things like load shedding. Are we going to have this under control? You need certain legal and policy matters sorted out. For example, the processes ongoing around expropriation of land without compensation. So those are key uncertainties that businesses are facing. Businesses that need to decide on investing and creating jobs heading into 2022. And at this stage, with all of this uncertainty, they can't put their money down and actually create those jobs and do those investments. And without those, you can't see the economic growth that's underpinning many of these optimistic forecasts for next year.
Well, I'm glad that you are being optimistic about next year, which is actually an echo of President Cyril Ramaphosa when he announced that the 4th annual South Africa Investment Conference, which will be held next year, is projected to attract significant international funding into South Africa. But then let's strike a balance. Don't you think this could don't you think it could be counterproductive? Because you also mentioned the fact that the cost of doing business has shot up. and there's the possibility that it will continue to rise in the year 2020. So we have projections right here, which seems positive on the outlook, and we have the cost of doing business, which seems to be on an astronomical rise. Now, how do we strike the balance? How do we understand that 2022 can actually bring about positivity for business and the business environment, business community in South Africa?
Well, the President's Investment Summits always attract a lot of international investors. They also make a point of making big announcements on future investment plans. And we've seen the past few years that many of those do happen. And we've also seen that some of them don't happen, or they don't happen as quickly as expected. What happens at these summits, they are announced as, let's call it, intended investments or planned investments. So there's no guarantee that they actually will happen. And we know that with the disruption of COVID-19, some of the pledges made at the 2019 Investment Summit have actually not happened yet. They might still, but they didn't happen. So it's one of those things that we are optimistic about the summit in March. We are optimistic about investors coming, and we're optimistic about more announcements being made. But then those investors will probably just a little bit down the line from there in April and in July, different electricity price adjustments happen at those two stages. And it could be that electricity prices go up by another 15%, which is significant. It's 3 times our consumer price inflation, and electricity has tripled in price over the past decade. So it's something that businesses will need to deal with. And it's something, so not only is electricity prices going up, but they're also less reliable. So those are the factors that then when you've got that level of optimism coming in, it just brings it down a bit. You have to look at other elements as well, the cost of fuel, cost of transport, etc. It's something that makes it a bit difficult to be optimistic. We have our finance minister in 2 days' time on Thursday. He's delivering the fiscal budget, which is a medium-term budget looking ahead 3 years. And he'll also have to make assumptions that try to balance the optimistic and the pessimistic. He'll have to look at these things realistically when it comes to where the economy is going, where government funding is coming from, and what they spend it on. So it's an immediate example within the next few days of the government needing to balance its expectations between the positive and the negative. And then with the release of this medium-term budget, signaling to the country, to the business community, to individuals, to foreign investors, where they see the country actually going and what their promises are of how they can help shape this economic future over the next few years.
Thank you so much, Christy Viljoen, for joining us on this show. Really appreciate you being a resourceful person on the program.
Thanks for the opportunity.
All right, there you have it. Of course, there are challenges and there are also solutions, even as Christy has said. But then, aside the 4th annual South Africa Investment Conference coming up next year, as President Cyril Ramaphosa has announced, he also said that 25 preferred bidders in the 5th round of the country's renewable energy independent power producer procurement program are in the offing. He also said that his government is tinkering with increasing the licensing threshold for the addition of 100 megawatts. Now, the president is hoping this will result in substantial private investment in electricity generation projects and adequately address the debilitating load shedding issue currently faced. Now, how that will pan out in the coming months, we get to see. Until then, South Africans will just have to hang on and find alternatives. We go for a quick break now. When we return, we get to bring you NC42 Watch. Do stay with us. It's now time for NC42 Watch. Thank you so much for staying with us. Now, let's start by telling you that Tanzania has announced plans to borrow at least $2.34 billion from foreign sources to finance its proposed 2022-2023 budget of $17.1 billion. According to the finance minister, Mwigulu Nchemba, 7.7%, representing $1.32 billion of next year's budget, will be funded through direct concessional loans and grants from development partners under the traditional general budget support arrangement. Another $1.04 billion is expected to come from project-specific commercial loans from international lenders. International Finance Corporation, the private sector lending arm of the World Bank Group, has partnered with Liquid Intelligent Technologies, a South African technology group, to expand data center capacity and fiber optic cable connectivity in Kenya, Nigeria, Egypt, and South Africa. IFC's equity and debt investments in Liquid Intelligent Technologies, which to date is approximately $250 million in total, will support the company to grow its hyperscale data center capacity in the 3 African countries through its subsidiary, Africa Data Centers. Let's also tell you that Nigeria's crude oil production dropped to 1.37 million barrels per day last month from 1.39 million barrels per day, a survey by S&P Platts. The country's oil production in October was 261,000 barrels per day, below the quota given to it by the Organization of Petroleum Exporting Countries and its allies, according to the survey. Now, according to Platts' report, Nigeria's oil output continues to be hamstrung by operational setbacks, with key pipelines facing persistent sabotage. And finally, Finance Minister Enoch Godongwana is expected to clarify South Africa's fiscal situation in his maiden medium-term budget policy statement on Thursday, that is on November 11, including the possibility of new taxes. And those are the stories you should look out for on NC4 to watch. Many thanks for joining us. Do not forget that you can join the conversation by visiting all our social media platforms. We are at News Central TV. Do not forget we have our website too, www.ncentral.africa. And you can also download our mobile app on App Store and Play Store. Until next time, I am Lekon Obanjo. Thank you so much for watching. Have a great day.